Hello and welcome to BQ Prime. I'm Hiral Dadya. Joining us on the show today is Mr. Sivaramakrishnan Ganapathi, MD at Gokaldas Exports, joining in. Welcome to the show, Mr. Ganapathi, and a pleasure to speak to you.
Thank you. It's a pleasure of mine as well.
Absolutely. So, Mr. Ganapathi, my first question coming to you is the textile sector as a whole has been spoken about a lot lately, with all positives and negatives coming in. Uh, Clearly, the bigger question today is we've seen from your earnings as well the way the company has progressed in the second quarter, we've clearly tried to beat the macroeconomic challenges as well, seen a growth of almost 29% in terms of the revenues. Yes, there has been a seasonal impact from a quarter on quarter basis, but we've seen stability emerging, right? So, what is it that
Yes.
has led to this kind of stability for a business like yours when everywhere globally there is pressure?
See, when it comes to this business, it's all about execution.
Hmm.
So we have executed well. We have been very, very consistent in the quality of our products, in the on time and in full delivery of our products, and in maintaining our customer relations. So we've gone above and beyond and done that consistently, order after order after order. So that's what endears us to our customers. We also have a fairly diversified customer base. So in the event that there is some challenges with one customer, we do have the ability to pivot and try to obtain business from the other. So that somewhat ameliorates the situation. So that is what has helped us stay ahead of the curve and be able to grow despite the fact that Indian apparel exports in the second quarter has actually declined YOY.
Correct. Absolutely. I mean, when you talk about the government data as well, clearly, I think we're almost at a 28-month low in terms of textile exports as well. But from the way the business has gone for you, if you could just help us understand from a US and a Europe perspective as well, majority of the companies have spoken about challenges, but everyone's spoken about US being a resilient market. What would your view be?
No, I maintain that, and that's one of the reasons why we have also been more and more focused on the US as opposed to the rest of the world. So today,
Hmm.
US accounts to almost 75% of our exports. Now, on one hand, you could consider that as a high risk, all eggs in one basket, but it has been a conscious strategy for the moment because we find that the market has been resilient. YTD US retail sales has still been higher in 22 versus 21. I'm talking of calendar 22 versus calendar 21.
Hmm.
This is not the case for, say, the other big markets like European Union or even China for that matter, where retail sales has been hit by COVID. So US has been a resilient market. We have been focusing more and more on the US, obviously for strategic reasons and tactical reasons, and I think that also helped us maintain our share of business. Now, as far as the point on recessionary trends, etc., go, that is a reality that we have to live with. We
Hmm.
can't change the macroeconomic fundamentals. The long-term prospects for the industry is very strong, given that the production environment or the manufacturing environment has to move from China or other places which are high cost and geopolitically vulnerable to places like India. So I see the long-term prospects as very strong. Short-term, we will have some headwinds in the form of recession, in the form of challenging market conditions. But again, I see that as an opportunity as well. So if you look at how Gokaldas performed during COVID, that was a period when most of the brands bought about 25-30% less garments because markets were closed. But
Correct.
our exports fell only by 9%. So we gained market share. We consolidated market share. I see that kind of an opportunity come up again when there are recessionary trends and brands in turn will buy less from their suppliers. There is an opportunity to consolidate. If a brand decides to buy, say, 20% less, it doesn't mean that they will have a 20% secular cut across all their suppliers. So certain suppliers who perform well may get away with a smaller cut. Cut there will be, but some will perform better, some will perform far worse. It is our
Hmm.
endeavor to be lose as minimally as possible during this period, gain market share, so that when the market bounces back, we can bounce back with the market.
Right. So overall, when you talk about the recessionary phase in the US as well as in European countries, the majority of the managements have come out with a commentary saying that yes, there has been a concern with regards to inventory pile up. This holiday season is something that we need to wait and watch, and then
Correct.
actually decide the course of action. Would you agree with a strategy in a similar fashion?
I agree with the strategy. So most of the brands will be waiting for the data from the holiday season sales,
Mm,
and that is a big sentiment tracker, right? Holiday season constitutes a big chunk of annual sales. So if the holiday season sale goes well, then the confidence of brands to buy more would be a bit better. So we have to see how that goes. But what I'm trying to say is, regardless of all
mm,
of these situations, we have to keep just one step ahead of the market, make sure that we are consolidating the supplier base, and net, even if let us assume that holiday season sale is not that great, and buyers respond by buying less, it still could be turned into an advantage, albeit in the longer run, by ensuring that we pick up market share.
right. So, in fact, you are sitting in the US right now already. What's the kind of sentiment you're seeing around? Because that's one important factor to consider as well when you actually talk to people, when you see what's happening in the region as well.
So sentiment is not great. Let me put it that way. People are worried about recession. People are nervous
Mm,
about the holiday season sale, and they want to wait and watch to see how the demand situation pans out. Everybody is nervous of 2023, right? So if the interest rates keep going up the way the Fed has done it so far, it reduces the disposable income in the hands of people, and that in
correct.
turn leads to less of consumption. And US is a consumption-led market. So I don't think anybody is debating on would there be a slowdown. I think that's given. It's just that how protracted would the slowdown be, and how
Mm,
soon would the market come out of it, right? So if it's a shallow slowdown, and if it comes out soon, which I feel it's going in that direction more likely, and the holiday season sale will probably indicate how that pans out, then I think the industry will recover pretty quickly. But we'll have to
right.
wait and see how it goes. It'll still be a few quarters of stress for sure,
Mm,
but
mm.
then it is what it is.
Right. And overall, from an order book perspective, you did mention in the earnings call as well that in terms of Q3, will be very similar at what we saw in terms of the third quarter of FY22. But from there on, how do you see the order book building up? Are you seeing any deferments already happening with regards to orders that you would probably expect in the fourth quarter because of the relationships that you have? Because that's one of your key strengths with the customers that you deal with.
So the order books are somewhat stressed beyond the third quarter, right? But I wouldn't say I'm sweating too much. So there are concerns from the brands in
Mm,
terms of confirming and committing to orders, because that binds them. So they're waiting and watching, and they're placing it at a slower pace. I feel that once the Thanksgiving sales start, we will see a little more traction depending on how the sales go in the market, right, in the retail market. That said, I feel that for a few
mm,
quarters ahead, there could be some stress in terms of order placements by the brands. You should understand that multiple markets are stressed, right? Europe and China are also stressed. So order and brands are sitting with
mm.
inventory too. So order book will be stressed for a few quarters. We will have to weather that storm, and I know, again, treat that as an opportunity to gain market share, and then grow when the market corrects itself. Grow at a superior rate, grow at a faster rate after that. Yeah.
Right. Overall, Mr. Ganapathi, how are you viewing Bangladesh as a whole? Because clearly Europe is one of the regions where Bangladesh caters to because of the duty-free access that they have. Now,
Correct.
European markets are weak as well. So, how are
Mhm.
you actually viewing that entire scenario? Do you think this is the best time to look at Bangladesh? Because now we've been hearing a lot of talks where they are looking at bailouts as well from an economy perspective, right? So,
Mhm.
how are you viewing Bangladesh as a region?
See, Bangladesh in the long run will continue to be a strong region, given that Bangladesh has a fairly well-established
Mm,
apparel ecosystem. The production environment is great. The availability of labor is terrific. The country supports manufacturing very well, goes above and beyond and supports the manufacturing sector. And the middle management ecosystem is very robust. So the long run prognosis for Bangladesh
mm,
is solid, right? And as more and more business comes
mm,
out of, let us say, China, which is almost 10 times that of India, you would see that India, Bangladesh are better positioned than Vietnam, where again the costs are going up, and there aren't too many other countries left. So our aim is to make sure that we are present in those places which are long term sustainable, right? We have to be in the business for next 10, 20, 30 years, and if some of these locations are good to go from that perspective, it is great. Now in the short run, we may have certain challenges in Bangladesh. The European orders are less, so a lot of Bangladeshi producers have open capacities, but that's true globally, right? There is a bit of a demand supply mismatch, and
mm.
that will correct post recession. So we should not get daunted by it. We should just factor that into our planning. So we have slowed down our commissioning of our Bangladesh
Mm,
unit. We are not walking away from it. On the contrary, we are committed to it. We're just
mm.
trying to time it properly so that when the market turns, we are ready with the capacity.
Right. And on a capacity front, again, we are looking at setting up 2 new units, which will probably come up in the first quarter of FY24. And clearly, we're looking at around 500 to 600 crores worth of top line from these two plants. So, what are the kind of timelines we are working with? Do you think we will be at 100% capacity in the first year of operations itself? Or will it, how staggered will the revenue generation be?
Oh, it'll take about a year, between a year and a half, closer to year and a half before it reaches
Mm,
100% capacity utilization. These units have to ramp up and mature in order to deliver to its full potential. So by then I'm very very confident that the market will be pretty strong, and in fact India will see a huge positive fallout from global market recoveries, because we're talking of a year and a half, which from first quarter. So that's good enough time for the capacities to mature and be fully utilized.
right. And from a domestic market perspective as well, I know majority of the business does come from exports, but how are you seeing the overall environment from a domestic market perspective?
I think India is doing very well compared to any other part of the world. So Indian domestic market is doing well. We have seen fairly robust retail demand in the country. It's a very very good market, and India is one of the fastest growing apparel markets in the world. So definitely India is an opportunity. We have still focused more on the exports side, given that
Mm,
from a profitability perspective, it is far more superior, and our production units are designed for the export markets. So we don't want to dilute it by focusing on the domestic markets. But otherwise, I feel
mm.
very buoyant and confident about how the Indian market is shaping up.
Right. And overall, if you see in terms of prices of cotton as well, between domestic and international prices, we have inched lower from the peak of almost 1.1 lakh a candy that we had seen earlier, right?
Mhm.
However, as compared to US, we're still sorry, as compared to international cotton prices, we're still expensive. How do you
Right.
see that trend moving?
See, that is a source of concern, right? We should try to have raw material pricing advantage
Mm,
in the country if we really need to become an export powerhouse. So Indian
Hmm.
cotton productivity is low. The yield per hectare is low, and Indian cotton has to, the production has to increase going forward. If that happens, the prices will become more or less, will start approaching international markets. For now, we do have a delta, which which is which disadvantages, so to speak. The other point
Hmm.
to be kept in mind is that Xinjiang cotton, which China relies on, that also is not acceptable in the
Hmm.
West. So that also makes Indian cotton quite, Indian cotton prices high. So there are
Hmm.
a plethora of factors here. But at the end of the day, the way our business is structured is that raw material cost, we try to make as much as possible a pass through. So we
Hmm.
try to pass it on back to the customers. A high cotton prices obviously impacts demand. Thankfully, from over a lakh rupees per candy, it has come down. So that's good news. YOY, rates are better. If the cotton rates remain at these levels or slightly eases, it will be even better for Indian industry. So now, given the demand supply situation that exists in the world, there will be a pressure to keep the cotton prices softer because offtake may not be that high.
Right. And overall, with this, my last question coming to you is from a macro perspective with what the government is doing, right?
Mhm.
Now, in terms of the Indian government as well, they're targeting textile exports of almost $100 billion in the next 5 to 6 years. And taking that into consideration, the kind of progress that they're making with PLI schemes, etc. Do you think anything more needs to be done, or do you think this is something which the government will be able to achieve in spite of the macroeconomic situation?
See, it's not just about PLI. The government is also doing a wonderful job in terms of infrastructure development. Whether the roads or ports in India, etc.
Hmm.
So the friction in the economy because of all these lack of global standards and infrastructure is now going away, and we are getting a level playing field there too, right? So I think over a period of time, we will find that all these government initiatives only bear fruition, and it will nudge the industry faster to that goal. When you say textiles, it is apparel plus fabrics and all of those, right? So it is possible in a 5 6 year time frame, and we need to work hard. The larger players need to step up. And remember,
Hmm.
apparel is the front end of the value chain, right? This is what gets
Hmm.
consumed by the end customer. So the apparel industry has to grow, in my opinion, if the Indian textiles exports have to grow. Not enough
Right.
for cotton to go or fabrics to go, or yarn to be exported. Apparel has to be exported so that it's fully value added, and that will in turn lead to a pull in the entire value chain. So
Hmm.
apparel exports, which was about 16 billion last year, needs to now grow pretty substantially. Can we do 3x? And for that to happen, we need a few large players step up and drive growth. And that
Hmm.
if that happens, I think then India will not look back. It will continue its momentum. But like, just to give you a context, China exports 120 billion.
Hmm.
There are several products which China makes, which India can also make. So there is nothing that we lack except for certain synthetic fabrics in the country, which still needs to be imported if we have to grow on that side. But those lacunas also need to be fixed. PLI one sought to do that by encouraging investments in MMF-based sector, but that
Hmm.
has to result in some fruition, and that will also encourage more Indian exports. The other
Right.
one area where the government probably can help is,
Hmm.
currently the ROSTL regime, that's the refund of state and central levies, has been announced till FY24.
Hmm.
So an announcement in advance, as to what is the ROSCTL regime going forward for the next 5 to 10 years will really help, because then all the planning can be made accordingly. We know what exactly we are getting from the government, and then we can factor in the rest as an industry.
Hmm. Hmm. Right. So I think, we are, I think, probably in the right direction as a country. And I think
Mhm.
little more push to it. And I think we will be able to gain that market share where we have the potential, and just a little bit push is needed, right?
Right, absolutely. And I think the push is coming in most areas. We have government which is very sensitive and understanding. The government is going out of the way to make FTAs happen. Now that's a tremendous work that is being done. And if and when FTA with UK materializes, that will open up another big market for the country. I foresee, even demand going up by 1 billion or more for India just from UK itself. And if EU happens, which is still down the line and it's a more complicated negotiations, I think that will open floodgates, for India. So there are several areas which the government is working on, and these things come with a phase lag, right? The results will come with a phase lag, but I'm very confident that Indian industry will step up and take advantage of some of these initiatives by the government. We also would like to see the government initiatives bear fruition so that we can take advantage.
Right. So my last question on this point is that do you think that Indian corporates are geared up to meet that kind of demand that will start flowing in on the back of the FTAs that we're talking about?
So capacity creation has to be there. Some of the corporates are ready for it, are quite mature and are quite capable of doing it. We probably need to see more of them come up, and the larger organized players will have to take on the mantle and start delivering it. So I think that's where the key is. This is not about requiring a huge sums of capital. This is about huge managerial capability to succeed. So it's about organization, managerial capability, and all, and leadership that has to come to bear for the exports to grow. I think we have talent, we have the risk taking entrepreneurs. I think it'll be done. It'll happen.
Absolutely. I think the entire plethora of things which are needed is right here. The push that needs to come in and things need to fall in the right place. Thank you so much, Mr. Ganapathi, for joining us on the show. A pleasure to speak to you. Thank you for the insights as well. Stay safe and speak to you soon again.
Thank you, and look forward to